Howdy, everybody. Welcome to Liberty Call. Today is Friday, September 27th, 2024. Hope you're having a fantastical day out there in the interwebs. It's a beautiful day here again in Colorado. It's been lovely most of the week. Not hot, not cold, just kind of medium. My main man, Jake, back here is excited because as soon as we're done, it's ball time. So he said to wait. I had a workout, shower, shave, everything. So he's been very, very patient. So, all right. Well, before we jump into the weekly numbers or today's numbers and the weekly numbers, if you could do me a favor. Yeah, right there. If you could do me a favor, if you could give me some thumbs up, a like, share, subscribe, a follow, and press that notification bell. All righty. Let's get into the markets. Dow Jones was up a third, 137 points, closed at 42,313. S&P 500 down 0.13%, 7 points, closed at 57,38. NASDAQ down 0.4%, 73 points, closed at 18,116. VIX was up 10.34% today. It's at 1696. Canada down 0.32, Brazil down 0.21, and Mexico down 1.52%. In Europe, Germany was up 1.22%, the UK up 0.43%, France up 0.64%, Netherlands up 0.63%, Spain up 0.12%, Italy up 0.92%, Switzerland up 0.22%, and Portugal up 0.54. Russian exchanges both green today. MOEX up 1% even. RTSI up 0.67%. And the overnights, the Nikkei in Japan was up 2.57%. Australia up 0.1%. New Zealand up 0.45%. In China, the Shanghai was up 2.89%. The Shenzhen component up 6.71%. China A50 up 3.58%. DJ Shanghai up 3.63%. Hang Seng up 3.55%. And the Taiwan weighted when it closed on the 26th was up 0.43%. So I believe what is going on in China is they're doing some QE, quantitative easing or something, basically manipulating their currency. And that's why their markets are just jumping in the last couple of days. Shocking, I know that, a central bank would manipulate currency. Shocking. All righty, let's get the charts up here and we'll take a peek and see how the markets did for the week, starting out with the Dow Jones. All righty, it's going to finish the week up about 0.59%. The S&P 500 about 0.87%. The NASDAQ up about 0.87%. Dow Utilities up about 0.41%, and the Dow Transports up about 2.7%. We'll call it that. So, yeah, the major indexes were kind of muted, 0.5%, 0.8%. But anyways, big jump there. Let me put this back so when I look at it on Monday, I'm not looking at the wrong stuff when I open up my computer. All righty, well, let's get on into the economic data that came out this week, starting out with jobless claims. Initial claims came in at 218,000, below the 224,000 forecast. Previous number was 222. Continuing claims came in at 1.834 million. Forecast was 1.828, so a bit above forecast. Previous number was 1.821. The housing price index year over year grew at 4.5%. Previous number was 5.3, so it has been trending downward. And on a month over month, it grew at 0.1%. Forecast was 0.2. The consumer confidence index came in at 98.7. The forecast was 103.9, so a bit off there. And the previous number was 105.6, so a bit of a step down in the last month. New home sales came in at 716,000, forecast 699. Previous number was 751, so we did pull back a little bit, but still higher than the previous months. New home sales month over month contracted at 4.7%. Previous number was a growth of 10.3%. And GDP, the final number for Q2 was 3%, right on forecast, and the previous Q1 was 1.6%. Excuse me. Durable goods orders month over month were flat at 0. The forecast was a contraction of 2.8%. Previous number was 9.9% growth. And pending home sales month over month contracted at, only grew at 0.6%. The forecast was 0.9%. Previous number was a contraction of 5.5. The PCE Price Index, the preferred measure of inflation by your Federal Reserve, the Personal Consumption Expenditures Index, grew at 2.2%. Forecast was 2.3. Previous number was 2.5. And on a, let's see, I think this is the month-on-month number. It grew at 0.1. Forecast was 0.2. Previous number was 0.2. Personal income grew at 0.2%. Forecast was 0.4. Previous number was 0.3. And personal spending also grew at 0.2. So it was a wash. Forecast was 0.3. Previous number was 0.5. And the trade imbalance, it says trade balance, but it's a trade imbalance. We have a deficit of $94.26 billion. Forecast was 100.6 billion, so better than forecast. Previous number was 102.84. So some improvement from last month's numbers there. Oh, got one more. The Michigan consumer sentiment came in at 70.1, forecast 69. Previous number was a 69. All right. That is all the data that is fit to be told for the week. Let's go ahead and jump into the market recap. Dow closes at record as energy stocks ride oil prices higher. On Friday, the Dow closed at record highs, driven by surging energy stocks and signs that inflation is cooling faster than anticipated. Really? Despite some weaknesses in the tech sector, inflation pressures eased as the PCE Price Index, the Fed's preferred inflation measure, rose just 0.1% in August, slower than expected. The year-over-year reading slowed to 2.2%, below estimates of 2.3%. Core PCE, excluding volatile items, remained stable, rising 0.1% and monthly and 2.7% annually. U.S. consumer spending grew at 0.2% in August, down from 0.5% in July, while household income growth also slowed to 0.2%. Energy stocks rose over 2%, driven by a surge in oil prices amid escalating tensions between Israel and Hezbollah, as Bibi would say. Intensified Israeli strikes in Beirut fueled concerns about potential disruptions in the Middle East, pushing oil prices higher. Now, if I could stop here, I've been hearing bitching and moaning for the last 2 years that Russia's the bad guys because they crossed a border because they didn't like having NATO and NATO countries' arms on their border. So they crossed over into Ukraine, and there was also some other issues like Ukraine bombing the Donbass, where primarily Russian-speaking Ukrainians live, but, you know, that's another issue. Now we have Israel going across into sovereign territory of Lebanon because they don't like missiles and bombs and stuff right on their border. So on one side, we're against it if Russia does it, but we're okay with it if Israel does it. Interesting. All right, let's get back to the news. Despite positive earnings results, Costco's stock fell over 1% as the retailer's fiscal Q4 beat Wall Street estimate, or Q2. But market response was lukewarm. Nvidia also saw a decline of over 2% following reports that China is pressuring domestic companies to prioritize locally produced artificial intelligence chips over Nvidia's products, furthering concerns about the impact of U.S. semiconductor restrictions on Chinese firms. So they're going to grow domestic chips. I mean, are they going to plant them out in a garden, like a box garden, and little computer? Never. I'm being silly. All righty, and finishing up, overall, the market remained optimistic, buoyed by inflation data and expectations for further Federal Reserve rate cuts. Yeah, because we always need easy credit and money because that just makes the economy chug, chug, chug. I mean, so be it that it creates a lot of inflation along the way, but hey. All right, got a research report here from First Trust, August personal income and consumption report from Andrew Opdyke. So let's see what he had to say, or a data report, I'm sorry. The August report on personal income and spending provides key insights into the U.S. economy, including the Federal Reserve's preferred measure of inflation. The PCE prices rose 0.1% for the month and 2.2% year over year, a slowdown from the 3.4% annual gain in August of 2023. Core PCE, which excludes food and energy, also increased by 0.1% in August, showing a a 2.7% annual rise, down from 3.8% a year ago. This reflects the impact of tighter monetary policy over the past year. With the Fed's recent 50 basis point cut, inflation is expected to continue easing. On the income front, personal income grew by 0.2% in August and 5.6% annually. Private sector wages increased by 0.5% for the month, while government pay also grew by 0.4%, up 6.6% year over year. Because those government employees, they need raises. Close to the largest annual increase in decades. Consumer spending also rose 0.2% in August, driven by services up 0.4%, though goods spending dipped slightly by 0.1%. Adjusted for inflation, consumption increased by 0.1%, with services expected to continue driving consumer activity despite elevated interest rates and ongoing inflation pressures. In other news, the Kansas City Fed Manufacturing Index declined to a -8 in September from -3 in August, signaling weakness in the factory activity. Additionally, pending home sales rose by 0.6% in August after a sharp 5.5% decline in July, but overall the housing market is expected to remain weak in September. All right. And just one last article here, a little food for thought. This comes from the Mises Wire, the vampire fiat money system, how it works and what it means for your wealth. This is written by Thorsten, how am I going to mess this up? Pollitt, P-O-L-L-E-I-T, Pollet? Could be French. I don't know. All right. The article draws a vivid comparison between vampires and the fiat money system, emphasizing its parasitic nature, kind of like government. Vampires immortalized in literature and film drain the life force from victims, just as the fiat money system, through inflation and unequal distribution, saps the economic power of the general population. The system is described as operating in darkness, where most people are unaware of how fiat money works, allowing governments and banks to manipulate the money supply for their own benefit at the expense of ordinary citizens. Fiat money is created without real savings, leading to inflation and capital misallocation. The beneficiaries are those who first receive newly created money, including state, banks, and large businesses. Meanwhile, late recipients and those with no access to new money suffer from rising prices and diminishing purchasing power. This process is likened to a vampire feeding on helpless victims. The system also enslaves individuals and businesses, making them dependent on low-interest loans and rising asset prices, while savings lose value due to inflation. The vampire analogy extends to the concealment of the system's flaws, as the truth about fiat money's harmful effects are rarely taught. The article argues that exposing the fiat system's flaws with sound economic education is crucial for dismantling it, much like sunlight destroys a vampire. Yeah, I think if most people understood how the money works, I mean, when you put your money in the bank, it's not yours anymore. You just have a IOU with Bank of America or Chase or whoever. It's not yours. It could just disappear at a moment's notice. And again, there's no backing to it. There's no gold or silver or platinum or anything of tangible value, oil, that's linked to. You couldn't take your $20 bill or your $100 bill and swap it for something that it's always an even trade. Well, in today's world, let's say an $80 is an even swap for a barrel of petroleum, or $2,500, or is it 26? Yeah, $2,600 will get you an ounce of gold, which 20 years ago it was like $400 or $500. So. Anyways, all right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. That's where you can go get all your financial planning needs addressed. All right. Well, I hope everyone out there has a wonderful weekend, and I shall talk to all y'all again next time. Adios.